Hello, everyone. I am Joe Rotondi. This is a panel about how we get tokenization into the real world with institutional adoption, and what are the major roadblocks. We've got a great panel for you. Unit Network, by the way, I'm co-founder of it, is a blockchain for tokenizing real-world assets, essentially everything in the world, the long tail of value that is not currently traded or being fractionalized as illiquid. So just yeah, that's kind of my framework. But we have a really diverse and solid panel for you today. I'll let everyone sort of introduce themselves. We'll start with Silvia.
Hi, everyone. It's a pleasure to be here. I'm Silvia. I'm the board member at Orygin. Orygin is a protocol focalizing in the certification and in the tokenization of real-world assets. We focus on gold, diamonds, and luxury goods, and art. But the applications are far more, so that's why I think we can uncover a bit more later today together, and it's a pleasure to be here with you.
Hi, everyone. I'm Anastasia, the head of digital assets at Sumsub and a certified expert in financial crime risk and cryptocurrencies. Sumsub is an identity verification service provider. So we have QIC, QIB, transaction monitoring, travel rule, on-chain attestation, and other services to centralized, decentralized exchanges, Web3 platforms, and other projects.
Hi, everyone. My name is Geoffrey Kendrick. I run digital asset research at Standard Chartered Bank. I cover liquid coins and tokens, so people know my research for Bitcoin views, which thankfully went quite well. In April 2023, we were at 25,000. I said crypto winter's over, and we're going to go to 100K by the end of 2024, which was fantastic on the back of ETF and Trump stories last year. And then this year, I've written quite a lot about stable coins, which sort of leads into today's topic. Specifically in April, I predicted that the total market cap for stablecoins will go to $2 trillion by the end of 2028, and Scott Bessent uses that number in Congress today. So as far as I'm aware, I'm the only person in any bank globally doing this job full time. So as it turns out, if you have a monopoly, it's great to try and hang on to it. So long may it continue.
Hello, glad to be here. I'm Mico. I'm leading the DLT and digital asset team for Banca Sella. Banca Sella is quite an established player in Italy because the bank is 140 years old. It's the largest private-owned bank in Italy, and with the digital asset team, we are covering quite a large spectrum of activities spanning from custody, e-money token, and hopefully tokenization soon.
Wonderful. So we have banking. We have some upstart sort of tokenization perspectives. It's quite a nice panel. I'll start with Jeff. You just mentioned that tokenization will get to $2 trillion by the end of 2028. I think you privately mentioned to me that also that it would get to 330 million trillion by the end of next year, 330 billion. How do we get there? Like, what's the roadmap for that? How do you see it?
Absolutely. So I see stablecoins as doing a couple of things. Firstly, in this space, stablecoins is sort of like the gateway drug, actually. So everyone now has heard of stablecoins this year. Use cases are starting to come through in emerging market savings in particular, but also starting to come through on the transaction side. So for me, that gets people involved and interested in the discussion. It also has now started to create quite a lot of liquidity on chain, which I think is critical as well. So with those two inputs, and now the push for broader real-world assets to be tokenized, equity is probably coming next. At some stage next year, I suspect we'll get large asset managers taking off-chain funds and putting them on-chain. Let's say numbers like 30 or $40 billion from an institution. And when we get one of those, we'll probably go from 0 to 1 to 10 quite quickly because you'll have that FOMO from the other asset managers. And I can say, having spoken to quite a lot of them, they're essentially all looking at this space right now. So for me, that's how we could possibly go from tokenized real-world assets of just 30 billion today to, let's call it 300 or 330 by this time next year. Obviously, we need some regulations as well, which I'm sure we'll talk about too. But that's the basic roadmap, which to me feels quite inevitable just now. So if 2025 was all about stablecoins, I think 2026 is going to be all about tokenized real-world assets more broadly, and then DeFi, as per the previous panel.
Great. And Mico, from your vantage point inside a bank, are institutions ready for that kind of scale?
I would love to tell you that 1 year will be enough. I don't think so. Obviously, we are living the ChatGPT moment for stable coins, and we strongly believe it's time to invest. That's why, as Banca Sella, we entered this European consortium of banks aimed to issue a MiCA-regulated stablecoin. I agree with Jeff. We also have to deal with the regulation that is still very fragmented across the continents. Here in Europe, we have MiCA. It's not an easy regulation to deal with. It takes a lot for a bank to seriously understand when, the regulation stops and when it comes the interplay with other existing regulation, for example. So there's kind of a few topics to dig in about the interplay of MiCA and PSD2. We have the travel rule regulation that started. We maybe needed a longer grandfathering period for what's around messaging stuff, because this is not exactly working 100%. And plus, there's a lot around tech resilience, so DORA-related topic, because to deal with on-chain business model, you have a lot of critical suppliers. So I think still a lot of institutions need to step in. As more institutions step in, we will have a phase of nudging the local regulator to make this regulation more effective than they are now. And I'm expecting this to last at least a couple of years.
Okay, interesting. Anastasia, I had a question for you. If you, how do you see the balance between regulation for safety, that people are depending on it for trust these days, and maybe where regulation can kind of stifle innovation? Where do we find the balance there?
Actually, I think that we should start with that we have different approaches. So we have two completely different worlds. That's traditional finance and Web3 platforms. And traditional finance institutions have big compliance teams. They are strictly regulated. While Web3 platforms, and let's be honest, that's where the actual tokenization is happening right now, they are more inclined to flexible approach to let's say, on-chain attestation, reusable identity, etc. And it's difficult to them to comply with this strict regulation with MiCA. I completely agree with MiCA that MiCA regulation is not an easy regulation in the European Union. Yeah, I think that at the moment, I wouldn't say that regulation prevents users from onboarding to these platforms, and this not a barrier. That's more like opportunity. So I think that that will get more trust to users to participate in tokenization. Yeah.
Okay, we'll get to you, Silvia, but just for Jeff and Mico, does the institutional confidence always depend on this regulation, or can sort of other things like reputation, transparency, maybe cryptographic proof replace that traditional trust in the traditional systems?
I think it's fair to say, and I'll pick up on a point Anastasia was making as well, institutions like banks are basically run by compliance and risk functions today, right? And have been for the best part of 20 years since global financial crisis. So for banks, we need certainty. We're a very conservative organisation. So the useful parts in regulation would be to have the same regulation in different locations, right? As mentioned a moment ago. So I suspect where we go is we'll get clarity from the Clarity Act, pardon the pun. We'll get the SEC guidelines in the US. Obviously, we need the US government to reopen for any of that to happen, but let's just say in the next few months, right? We'll get Clarity Act, we'll get SEC guidelines. Falling out of that could be some sort of industry standards or industry rules, which I think would be fabulous in the US. And then maybe in Europe and UK, we can get something similar, right? So when you go into sort of industry standard space, it's much easier for global organizations like ours to do the same thing in different locations. So I think we will go there in 2026. So that's one bucket. And the other bucket would be where this is all going to happen, which is almost entirely Ethereum from my mind, because banks like ours trust Ethereum. The point was made in a previous panel today. It's never gone down. Like, no one in my bank is going to lose their job for building something on Ethereum, and then if it goes down afterwards, right? But if you do the same on other blockchains, you might. So the very large trustworthy chain, Ethereum, some regulatory clarity would be helpful as well, because again, banks are very conservative by nature.
Yeah, completely on the same page on the Ethereum thinking, and plus on the need to provide some standards to the market. Bad news for Web3 operator is that we just have one regulation. We don't have a regulation for banks and one for Web3. So we need to gracefully deal with this new regulation together. I expect this to be a bit harder for Web3 companies, but having more banks dealing with this kind of services and partnering with Web3 agencies and companies all around will probably let us step together up to the next phase. No, I feel we had a first wave of development of this whole on-chain industry that was around demonstrating that the technology was there and it was enough, that there was enough security and scalability there. For sure, we are okay with trust and security. Maybe scalability needs something to prove yet. We're going to see, I mean.
Well, interesting. Silvia, so you're at Orygin, you are bridging the physical and the digital worlds with art and fashion and gold. Do you see a path to ownership of tokens that doesn't rely on the state at all, or are we sort of stuck within the regulatory systems?
Yes, that's when we ask ourselves what is happening, right? When we tokenize assets, especially focusing on physical and everything. I can give you some example from my experience. Last week I was talking with different entrepreneurs, and we see a switch. I've been joining Orygin since 3 years and a half. A few years ago, when I was talking with entrepreneurs, they were still wondering why they should have been used blockchain, a decentralized ledger, transparent access to information for their goods, their, let's say, the items and everything that was kind of physical, right? Now, instead, when I was discussing just last week, you can see that this concept is super clear. They are really exciting. They see the value behind. And so everything is just on the next phase. It's more on how we implement it, when we are going to implement it, which is the operational change that might be impacting the organization. And I see the same trend that will also come within other sectors, such as identity, so more towards communities, right, influencing. And I see the same approach. So if now we are saying, okay, why should we use technology or infrastructure such as the blockchain for more transparency, is becoming more, I would say, natural, especially with, I think, the development of AI. We see a lot what we can call, pass me the term, fakery, I would say, online on different identities. So the proof of identity will become really the next big phase. So we'll not be driven by maybe, I would say, institution, or but would be, I think, driven more by communities and user itself, trying to really understand, that they can truly understand the technology, and so they can really be more owners of their own, I would say, identity. That's how I see it.
Interesting. And Anastasia, you're also in the digital identity sort of space to some degree. Do you have a take on this question as well? And sort of how does digital identity play into the future? Like, can we truly build peer-to-peer networks that are not dependent on any other trusted body, but you can have your own identity on the blockchain?
Yeah, sure. You know, actually, all platforms need to verify users to prevent some kind of anti-money laundering, terrorist financing, etc. But the way to verify identity may be different, and it should be scalable, it should be flexible, depending on the asset nature, depending on the risks, depending on the different factors. And digital identity is the hot topic now, and it will evolve, I guess. And especially maybe self-sovereign identity will evolve, especially on Web3 platforms. Yeah, and it brings trust and clarity to users. They own their data, they control their data. Yeah, self-sovereign identity and maybe reusable identity, maybe on-chain attestation. That's where the problem is, that we have some kind of problem from the regulatory perspective. That's not always recognized by regulators as a compliant tool, but users and platforms want to use this. Yeah.
I might just add something on that as well. So I think we're going to end up in a couple of buckets. So the two most successful things really in blockchain today, Bitcoin is one, right? People buy Bitcoin because it's a way to store wealth without a central authority. So that's kind of going to exactly your point here, Joe. Like, people want to have something which is outside of standard regulation, outside of TradFi. And the other super successful thing is unregulated Tether globally. Like, Tether today has about $170 billion in it, and it's used in all the footprint countries that Standard Chartered is in Asia, in Africa, in Middle East, in LATAM, right? So, and it's trusted now because, like all technologies, once it's used, user experience like gets over the hump and then starts to tell their friends and family to use this thing, and it's trustworthy and it's 24/7 and it's liquid and it's, you know, all the things that it should be in payments rails. So you have this huge space which is exactly that point you're trying to get at, which is outside of regulation and other. And then the other part will be where traditional financial things go on chain. So equities, for example, like tokenized equities. It's fair to say that you have good regulation in that off chain. So why not have good regulation on chain? And there we're just taking advantage of the superior technology. Yeah. So I think you split into those two groups. Yeah. So tokenized real world assets have regulation that comes on chain from off chain, and some of the others can maintain that ideology, if you like, to be still with outside the net.
I want to elaborate a bit more on digital identity because I'm expecting this to have a huge impact, especially, for example, the panel before was around DeFi. Imagine how recognizing a client might change with the digital identity credential. We are now at the dawn of the new technology, so European Union agreed on a standard tech stack that will bring to ADAS2, with ADAS2, that would bring to AOD wallet. So I'm expecting also when dealing with custody services through banks and also, you know, upselling other products to already known clients, especially thinking to what Sumsub is doing and other travel rule solution. I'm expecting digital identity to disrupt the whole messaging layer very, very soon.
Interesting. And you know, if you look around today, tokenization has become quite a buzzword over the past several years. But it seems like it breaks into two different buckets. One is things that are already trading, so it's sort of like stocks, bonds, commodities. And so you have institutional players being the ones that would be issuing those. They're the sort of players in the market. The other thing is fractional, illiquid assets, so real estate, collectible cars, collectible whiskey bottles, whatever. What about the long tail of value, though? The things that are not traded currently: brand, creativity, reputation, community. We talked about identity, but those are forms of value that don't. Those forms of value that don't rely on the state for enforcement. Could tokenizing that open a much broader market for the space of RWAs?
I think I can pick it up. I really do believe about the tokenization, as you mentioned, right? Is not only on, I would say, first of all, lowering the barrier of access to certain assets, right, that were more exclusive. This is really similar, and we see a big use case in the fractionalization of art, the art space. That's is one simple example. And of course, also the access to 24/7 kind of trading that's more liquidity, new revenue pools, right? When we tokenize gold, for example, what we do, we try to create new revenue pools with partners that have been already in the space, but maybe they have new clients, and so it's more, I would say, almost a step less within the chain. So there are less intermediaries, more direct access. This is what is tokenization also bringing on. At the same side, when we mention everything that is more on the information, I would say that blockchain as an infrastructure is also bringing a lot of power within the information. If you think about luxury good, for example, I don't know, many on the conference, of course, you already bought, for example, at least once a secondary watch, secondary bag, right? But you don't know actually how many owners that bag had. You know exactly maybe in the certificate certain information about the item, but you don't know the history, right? So it's not that I want to go too much in the traceability. Traceability is not a new topic, let's say. But tokenization is directly helping getting access to information that we don't have right now and that they can change the commerce. You can get access to this information as a brand and engage and build new experience with your customer. You know exactly what happened to your goods after you sell to restocks or wholesalers. So this information is what is powerful. Maybe not everyone really sees, is not yet, I would say, available sometimes, but will come. That is, I think, something that will come also with more tokenization being on everybody, I would say, change management roadmap in the next few years.
Anybody else have any thoughts on the broader tokenization of the world?
It feels like things that are illiquid off-chain should be one of the logical ones, right? So, so far in real-world asset tokenized space, it's really only money market funds, which are liquid off-chain, and then private credit, which is quite illiquid off-chain, right? So there's this home equity loan withdrawal private credit product that has about $10 billion in it today. So I think you will see some of that as well. So it could be illiquid commodities, could be illiquid art, could be illiquid whiskey bottles, to your point, Joe, a moment ago. I suspect it remains relatively niche in absolute scale compared to some of the financial market stuff, but it certainly can unleash new buyers, new ways to hold these assets, etc. So for sure, the technology can help there.
So I think that if tokenization will meet the expectation, the end game will be to bring the whole, security market there. Okay. Obviously, we're very far to get there. So I'm personally less bullish on real-world asset, illiquid asset. I'm more expecting a progressive approach of big asset managers, big banks, getting to trade part of their securities in a tokenized way, prove they are capable to do so, and scale accordingly. And then, if this will happen, maybe also, more exotic asset will follow.
Okay, but so is decentralization still the North Star for Bitcoin? Pointed the way to that, as Jeff, we've all mentioned previously. It's sort of like this parallel system outside of government, but we've kind of over time now drifted. It seems like with institutional adoption, like that's regulation is what we need. Is it still the goal to have this decentralized society, or are we kind of resolving ourselves into the traditional structure?
I think we are stepping back in the middle. I think you're right. So in terms of the blockchains that are most trusted, they remain the most decentralized. Yeah. So let's say Ethereum again, if I go back to them, like most decentralized, never gone down, etc. But what's happened interestingly with the foundations like Ethereum Foundation or behind a number of the other layer one blockchains, since the ETF launch last year, crypto natives have realized that TradFi can bring a whole truck of money to this asset class, right? So because of that, I can say personally, I've had reach out like reverse inquiry type from Ethereum Foundation and all of their competitors in the last 12 months or so. And I have to say it's been quite impressive. So actually it's the crypto natives that are circling back to the centralized version because they can see where the cash is going to come from in the next few years. So in a similar manner to if I was an equity analyst, I'd be talking to CFOs in all the corporates that I'd be covering. I'm now getting exactly that reach out from the organizations that stand behind. Now, they can't directly drive where the layer ones go, but clearly they can influence the dialogue. And so actually for me, that's been a massive positive. You're getting a good mix of decentralized benefits in the likes of Ethereum, but you're also starting to now see like there's someone sort of standing behind the curtain trying to push this thing in the right direction. So for me, it's actually a massive positive.
Maybe I've had a couple of points. I think regulation and decentralization are not mutually exclusive. In the sense, it's not that either you have decentralization or regulation. Let's also think about the new upcoming digital product passport regulation in the EU is, of course, not mainly on blockchain, but blockchain is actually the infrastructure of it. It's a great user, it's a great experience in the sense that thanks, if you bring the regulation of the digital products passport and you use blockchain technology, then you have both of the best of the both worlds, right? And this is something that is helping. Of course, the digital product passport is helping users in getting more information about the first, what we call supply chain. What I think, and we really do believe, is that will be super powerful if we have the blockchain over all the asset life cycle. This is what is really going to have an impact, and where we will see regulation together with decentralization be more at the serve of the users in general.
Okay, interesting. And if you just looked around and said, you know, what's one thing that if it was tokenized and it worked would really change the world?
I actually think, funnily enough, it's the thing which is the most illiquid off-chain today, which is US equities. So, funnily enough, I think the potential benefits and probability of getting to enough liquidity on-chain is high. So, let's say at some stage next year, you'll have enough liquidity in tokenized Apple stock on-chain to be rivaling what's happening off-chain. And that then opens up the whole previous panel story about DeFi, right? So, what this unlocks for me is, in the same way today, Elon Musk can take his $100 billion or $200 billion worth of Tesla stock, depending on the day, and borrow money against that using TradFi rails, right? Tomorrow, when this is all in DeFi space, I'll be able to borrow against my Apple stock using Aave, which is fantastic. So this is, as well as stable coins bringing the 1.7 billion people globally that are unbanked into the financial system, tokenizing real-world assets like stocks allows everyone to take charge of their financial future in the same way, quite frankly, only billionaires can do today.
So we've got US equities, or equities in general. Anything else?
Maybe I take it from another angle. It's not only one thing, but it's actually everything. So we do believe that everything should be tokenized. We believe that it's something that will come more and more natural for everyone. And I think, has been also heard over the 2 last days over the conference, on-chain is the new online, right? So that's where we are heading. It's not only one thing that will change, but it's actually all the things tokenized, more assets for everyone. Of course, with regulation and institutional adoption, this is what we drive, I would say, the new Web3 revolution.
Yeah, I completely agree. And I think that, yeah, we already have such a project like tokenized real-world assets or any diamonds or any high-value assets. And I think they will evolve and they provide access to more broad audience to participate in such high-value assets. And that's really great already.
Yeah, nothing left. I mean,
Nothing else? There's nothing else except for everything? Okay.
No, I agree. To get a step back, I was wondering, like, it was impossible to have this conversation with 2 banks on stage just a few years ago. So I think everybody agree we are trying to keep the best of traditional world and, decentralized. And what is happening, it's also regarding people and talent, And this is part of the outcome of the conversation we're having right now. Yeah, we have way more crypto people entering banks, and compliance and risk people with bank experience entering crypto companies. And out of these, we will make everything on chain, I hope.
Okay. So, all right, let's say this, whether it's through equities or stable coins, and then it leads to other things, maybe everything being tokenized. So, what does that world look like in 10 years? I mean, 10 years is a long time in crypto years. Crypto is like dog years, maybe even more, a lot more. So, what does the world look like? We combine AI maybe and other things. What's the convergence look like there?
I think in 10 years, I expect everything to be seamless, right? Sometimes we know that the user experience has still some barriers of entry. I believe in 10 years, for what I said also before, everything could be tokenized. Everything should be really also easy to get access to. So that's, I think, will be one of the, and I expect to be one of the things that will really change the next coming years and will drive the mass adoption that everybody is expecting. That is, I think, one of the big things that will happen, not so far, I think, in the next also 3 or 4 years with max adoption in the 7 to 8.
Yeah, I agree. And FCA has recently published its consultation document related to tokenization, and they said that tokenization is seen as is one of the key components of the future financial services. So I think we can expect that tokenization will gradually move toward broader adoption, and the regulation will evolve, of course. Yeah.
10 years is like a lifetime actually in this space. So I think in 10 years in developed markets, we'll all be getting paid daily. So you'll have payments done like by payroll that will all allow instantaneous payment for your work. It could even be hourly, but certainly daily. Individuals will be able to then, with that, via AI agents, pay their mortgages daily. We'll be able to take the rest of the cash and put it into tokenized money market funds or tokenized Apple stock or whatever you like, again daily, where AI agents will drive all of that. And then in developed markets, you'll have everyone will be introduced to the financial system globally. You'll have a removal of a number of currencies globally because stablecoins will mean deposit flight out of local banks. And so you'll get dollarization from the ground up, again, empowering locals. So all this goes to empowering people both in EM and DM for me. And I think actually 10 years is a really long way away. This could be like 3 or 4 years away.
Yeah, obviously, I don't have the crystal ball, and 10 years is a long time. I would say in Italy, there's more or less 400 banks. 3 of them are active in the digital asset space, you know? So first of all, many more players to step in. Less barrier when dealing with regulators. So I hope in few years we will have more standardized regulation across Europe and less barrier as possible when dealing with cross-border activities. Standardized, trusted, stable coins issued by banks. And there's plenty of use case we can explore in the next few years, okay? Before post-quantum will erase us.
Right. I mean, 10 years is a long time, but maybe to the extent that remember Uber is like 10 years ago when we had that wave for taxi drivers. I used to work at I'm a lawyer by background. I used to work at this Institute for Justice, a libertarian law firm. We litigated on licensing for taxi drivers, for barbers, for various things. And the only thing that really worked was peer-to-peerization. And so the taxi license in New York City was $1.3 million by the time Uber came along. So you can do that with Airbnb for hotels. Will banks be disintermediated? Will they still be? I mean, I know it's a sacrilege you're working there, but how does it? Maybe that's part of the 10-year plan, or are they still fully functional? Everything's under regulatory structure.
I'll go for a quick one on banks. So
I've only got a minute. Sorry.
Yeah, I think it's fair to say that as an industry, banks are going to be the losers from this asset class coming into fruition, right? So payments rails, trade finance, FX, all of that stuff is going to go onto DLT. So the key for banks is to try and be small losers. Yeah. So institutions like ours are trying to get ahead of this technology, provide new solutions for clients, and so I think that's the best way to go. Those that don't get ahead of it, I suspect in 5 years are gone.
Any last 10-second thoughts, anybody? Okay, well, it looks like we're standing between a world of the regulated and maybe, hopefully we can break through it. We'll see. But it was a great panel, good conversation. Thanks everyone for being here, and thanks for listening.